Good evening, everybody. Welcome to our Secure Freedom Fund launch webinar for Villages at Essex Park. We are so excited to share this evening with you. We've got a completely revamped slide deck that we're excited to share. Some details about Villages at Essex Park. We've been through this a couple times now, so we've got lots of great Q&A items to share with y'all as well. It's going to be a fun webinar.
Yeah, I think it's gonna be really fun. There's a fun little story for Villages at Essex Park that we'll get through about halfway through our time together. That I think will be very touching. That we're excited and honored to share about that particular acquisition. So, by way of introduction, I'm Dr. Elaine Stageberg. This is my husband, Nick Stageberg. We're the founders of Black Swan Real Estate, and welcome to everyone in our audience. I see lots of names that I recognize, longtime friends and investors, and also some new names on our webinar this evening. So if you're just joining us or you've been to many, many of our webinars over the years, we're excited to have you here. And it's pretty rare that we get to open the Secure Freedom Fund.
A few times a year.
Yeah, just a couple of times a year. And everyone's always kind of asking us, when is it opening? When is it opening? And so we have an opening right now. We are raising for our acquisition, Villages at Essex Park. And we've filled a substantial portion of our raise from our wait list. So thank you so much to our repeat investors who are already in the fund and added more to your commitment, or to those of you that were on the wait list and joined the fund for the first time. We have about 4 million left in our raise, so I do anticipate it will fill rather quickly. Nick and I will be doing our presentation tonight. We do take your questions, so pop those into chat, and we try our best to answer those as we go throughout the presentation. And then if anything doesn't fit in, with a particular slide, we cover those at the end of the presentation. And then you'll also see that Rachel is on the webinar. You can send her a chat. You can reach out to her. She'll help you with paperwork, funding, anything that you need. So with that, let's jump in. Excited to share the opening of Secure Freedom Fund.
So right there on the title slide, you can go to securefreedomfund.com, securefreedomfund.com. And I think Rachel has turned on the Invest Now button, so it is open to anybody who is not previous on the waitlist. You can jump in and commit capital right now. We're probably about 3/4 full for this round already. So if you'd like to, you are welcome to join us in the fund here in real time. Get a 10% fixed rate of return. It's about as simple as investing can get.
Absolutely. Our usual disclaimer, the information that we're sharing here is for the Secure Freedom Fund. This is a Reg D 506C offering that's available to accredited investors only. Everything that we're sharing here is our business plan. We share our historical past performance, and that doesn't always guarantee future returns. Investment does have risk, including the potential for missing returns, delayed returns, or even potential loss of capital. So every investor is encouraged to read all of the documents, look at all of the offering materials, and discuss the investment with your trusted professionals prior to making any investment decision. All of that paperwork is available at securefreedomfund.com. We make all of those documents publicly available so that you can review those. And then when you log into the Invest Next portal, that's the exact same documents there that you would electronically sign to join the fund.
And if this is your first time joining us, or you just like a little refresher, here's a little bit about us. As we said here, to kick things off, I'm Nick Stageberg. This is my wife, Dr. Elaine Stageberg. We're the owners and operators of Black Swan Real Estate. We're a husband and wife team, married for 14 years and counting here. We've got 5 kiddos, 9 and under so far. And I'll tell you that running a $500 million company, much easier than running a family of 5 little ones, especially during summer camps and stuff like that. Elaine's a psychiatrist trained at the Mayo Clinic here in Rochester, Minnesota. I'm a career technologist. I was managing about 13 teams of software engineers in my last role, serving at the Mayo Clinic as well, before we embarked on this current journey we're on, our latest startup here in real estate. And we're very vertically integrated. We started Black Swan Real Estate that owns assets, and Black Swan Living that manages those assets. And ultimately, we see ourselves as being on a mission to make the world a better place to live in the most tangible sense of the word. People kind of need food and shelter, and so it is a privilege and honor to be able to make the world a better place to live. So that's why we do what we do. Just a few numbers here to quantify that. We have over 400 million in assets under management today. That's about 2,000 doors. Seems kind of crazy to just say that. We've had had 42% revenue growth in the last year, which is incredible for an organization our size. Usually the growth slows down, but we just keep picking up steam. We've raised over $100 million of capital so far, and we've stewarded that capital very successfully. We have a real estate sales team. That's kind of what pays the bills around here, and we've sold going on $250 million in real estate. We actually just sold a property today. Had a listing close today for about a dozen agents on our real estate sales team, and we like to build things too. We've built an entire subdivision of townhomes. We just had an apartment building come out of the ground, get our certificate of occupancy a couple months ago in one of our funds. So it's incredibly satisfying to see something, where there used to be a cornfield and now there's just a place to live that, long after we're dead and buried in the ground, 100 years from now, that will still be providing housing for generations to come. So we've done a little bit of ground up construction as well.
Yeah, many of you have been alongside us with this journey, investing alongside us and being right there along the way, growing this portfolio. And we're just so grateful to our over 500 investors that have partnered with Black Swan, passively investing in the portfolio so that we can create this portfolio. And we're excited to continue its growth. And Villages at Essex Park will actually be our largest acquisition at 288 units. So that's a special property that we're bringing into the portfolio. Let's talk a little bit about Secure Freedom Fund at a glance. So kind of everything you would need to know about Secure Freedom Fund is right here on this slide. And then in the subsequent slides, we're going to dive into each of these bullet points in a little more detail. But we know lots of you are taking care of kids or still at the office or the hospital or those sorts of things and want to get the information quickly. So we're putting it all right here at the top of our time here together. Secure Freedom Fund is kind of what I like to say is it's very much like a choose your own adventure. We really created the fund so that investors could customize it to their own financial goals. The minimum investment is $25,000. And after that, you can invest in increments of $1,000. You can invest in your personal name, jointly, in an LLC, a trust, a self-directed 401k, or self-directed IRA. And then it pays a 10% fixed rate of return. And you can choose if you would like the monthly distribution option, if one of your goals is passive income and cash flow, or you can allow your distributions to automatically reinvest. That's the compounding option, in which case they compound monthly, which drastically accelerates your overall growth. We have a slide a little bit later for the compounding table. And then you also have the flexibility to choose when you exit the fund. That's called requesting a redemption. And when you'd like to exit the fund, you let us know. If you exit within the first year, you do surrender any of your growth, kind of similar to cashing out a CD at a bank early. But after that, a redemption is just business as usual. And we process those redemption requests on a first come, first serve, best effort basis. And then what we do with that capital is we're continuing to grow the Black Swan portfolio. So we're acquiring new assets, and these dollars are the down payment and the construction dollars for those assets that are growing the Secure Freedom Fund portfolio. And it's also very tax efficient. So sometimes people will think that because this is a fixed rate of return, that the fund is a debt fund, and it's not. The fund is an equity fund, which means that the fund has direct ownership of the assets in the fund. And because of that, all of the investors in the fund benefit from the tax advantages of real estate investing, which means depreciation. We do cost seg studies, bonus and accelerated depreciation. Your gains are paid on a K1 and all of the tax advantages that come from real estate investing. So again, that's the fund in a quick nutshell. And then our next about 6 or 7 slides, we go through each of these parameters of how you would invest in the fund in a little more detail.
So as Elaine mentioned, our minimum to invest is only $25,000. Typically on many of our other vehicles, it's a minimum $100,000. So it's very accessible. And then you can add investment amount in $1,000 increments. So if you're investing from, say, a self-directed retirement account, you need to invest $123,000 to kind of deploy all the capital that you have in that vehicle. That's no problem whatsoever.
Once an investor is already in the fund, when we have subsequent openings, existing investors are first in line for additional investment. And once you've hit that $25,000 minimum, you can add to your position in increments of $1,000 as well. So for example, we've been open to our existing investors for the last about week or so, and we've had lots of investors add an additional $10,000 or $15,000 or whatever number works for them because they've already hit that $25,000 minimum. And then as mentioned, there's lots of different ways that you can choose to hold your investment. There's paperwork for you as an individual, for a joint account, like with a spouse or a partner, for an LLC, a trust, a self-directed 401k, or a self-directed IRA. If you're investing out of one of those self-directed retirement accounts, oftentimes they'll have a certain piece of paper that they need us to sign or some additional step. Just be in touch with Rachel. She's used to working with all of those custodians, and she'll help you along the way. A question that will often come up here for folks who are choosing to invest out of a self-directed retirement account or IRA is that it takes a couple of extra days to get that liquidity ready. And so long as you sign your paperwork and you communicate with us your funding timeline, your spot is held. And that applies to any accounts. We understand people need to maybe sell stocks or move some liquidity around, but I find that that question comes up a little bit more often with those retirement accounts because it takes a little bit longer to mobilize that liquidity.
Mm-hmm. Yeah, what holds your spot in the line, so to speak, as the fund fills is signing the paperwork, signing that PPM. And some people have different things they need to move around. Takes a few days or week or whatever. Just go ahead and sign the PPM and then be in communication with us about what that funding timeline looks like. So we love being able to give people options, and that's one of my favorite things about this fund. We call it the Choose Your Own Adventure Fund. You can choose to do monthly cash flow distributions, or you can let that accrue and compound monthly. If you do that, your average rate of return the first year alone is 10.47%. It compounds very rapidly. You can choose back and forth whenever you want. There's no specific windows for you to switch back and forth between the accrue and compound and the cash flow option. A lot of people, they like to invest in the accrue and compound option early, maybe add a certain amount of money per year or let it compound up. It's going to double in 7 years. And then maybe as they're getting a little bit older, getting to retirement age, then they would switch to the cash flow option. It's part of their retirement income strategy. So it's very flexible, and you can switch between your accrue and compound and your cash flow option anytime. Also important to note that the vast majority of like debt funds and preferred equity funds, typically when you put your money into the vehicle, it doesn't start earning a return until the vehicle actually puts that money into a debt or equity investment. In the Secure Freedom Fund, you get that money, you get that return day one. That's why we have the wait list, and we open it up to our existing investors and people on our wait list and the general public. And we only do that once we are under contract, out of due diligence, imminently ready to close on an apartment building. It makes our job a little bit harder, but it makes the investment better for you because you're earning a return every moment that capital is in the vehicle.
So for the sake of clarity, let's examine what each of these options would look like. So the first option is that you elect to receive a monthly distribution. And as you're going through the Invest Next portal, you'll see that that's the first step in the paperwork. One of the sets of paperwork says monthly, and one of the sets of paperwork says compounding. So with the monthly option, as Nick mentioned, your capital starts earning that return the day it's deposited, and you receive your first distribution on the first of the month thereafter. That first distribution is prorated for however many days your capital is in the fund. And then every month, on the first of the month after that, you get the full distribution. Based on a $100,000 investment, that would be $10,000 per year, and divided by 12 monthly payments would be a distribution of $834 on the first of each month. And so whatever your investment amount is, you can just do that math of multiplying that amount by 10% and then divide that by 12, and that would be your monthly distribution amount if you chose that option. And then the other option is the compounding option. Lots of investors like this if what they're really looking for is accelerating their overall rate of return because they're automatically reinvesting their distributions. They're reinvested every single month, so it's a very aggressive compounding in favor of the investors. And Nick mentioned a couple of the earlier compounding. After 12 months, the effective annual rate of return goes up to 10.47. After 24 months, 11.57. And then you can see here after 7 months, it goes up to 19.03. After 10 years, 25%. And that's all because of that power of compounded growth, right? Warren Buffett says that compounding growth is the eighth wonder of the world. And you can see that right here with the compounding table. And at any given time, an investor can log into their account inside of the Invest Next portal. And under the investments section, you'll see your original principal amount, and then you'll see your accrued preferred return. So this is an example I pulled from an actual investor a couple of days ago where you can see that exact amount right there. As Nick mentioned, you can choose to switch between the two of them. You just email us. We have a one-page document that we all sign that moves your shares from either monthly to compounding or vice versa. You can even have multiple positions. We have Some investors say with like post-tax dollars in their checking account, maybe they invest those on the monthly cash flow option because those distributions would go straight into their checking account that they can use for their daily living expenses. But then maybe if they're investing out of a retirement account, they choose the compounding option so that they can get that total overall rate of return because that money there is in kind of that like set it and forget it. So you can have multiple buckets as long as they each hit that $25,000 minimum, some of monthly and some of compounding.
We have lots of flexible ways for you to request redemption to get your money back. It's not quite as liquid as withdrawing money from your checking account. It's just a little bit less liquid, and that's how you're able to earn such a kind of exaggerated rate of return. But all you do is just request redemption. Redemptions are processed on a first come, first serve, best effort basis. If you can let us know ahead of time, that would be very helpful, especially if you have, 7 figures in the fund or something like that. Smaller amounts are, easier for us to process those redemptions. In the past, we've never failed to honor a redemption request very promptly, typically, less than 30 days or sometimes even faster than that. We've always been able to fulfill those requests and make anticipated cash flow payments to investors. We've been doing different 10% fixed vehicles for close to 10 years now. This is actually the first way that we raised capital back when we were doing kind of 1 or 2 or 3 single family homes at a time. And it feels so good to see this kind of mature and evolve over time. If you redeem in the first year, you'll forfeit your return, but you just get your principal back. And if you've only been in the fund for a few months, it's not much of a penalty. We just don't want you using it like a savings account or a checking account. It's a lot of paperwork for us to bring money into the fund and to process redemption. So we'd like you to be in there for a year. The most kind of common strategy that you see other preferred equity funds and debt funds use is there's typically a 2 to 3 year lock-in or lock-up period where you cannot request redemption at all. So again, the Secure Freedom Fund is just it's a little bit better in every way. It's also very common to see in the marketplace that you don't earn a return in other vehicles between when you request redemption when you actually get your money out. In the Secure Freedom Fund, you are earning a return up until the day you receive your capital. So you start earning a return the day your money is received, and you keep earning a return until the day that you get your money back. So it's extremely straightforward and very much an investor-first model.
This next slide here speaks to the flexibility that we've designed into the Secure Freedom Fund. A big part of what we were aiming for as we created the Secure Freedom Fund is that investors could customize it to their own individual goals. And so some of this stuff we've covered verbally as we've gone through the slides, but we wanted to have some examples of the types of flexibility that's available in the fund. As I mentioned, you can invest in increments of 1,000 after you hit that $25,000 minimum. And then when we subsequently open the fund for additional acquisitions in the future, existing investors can add at whatever amount they would like to, 10,000, 15,000, 18,000, whatever it is that you'd like to add. You can switch between monthly distributions or the compounding option. You can hold multiple positions at once. The example here is like holding retirement dollars in a compounding option, but post-taxed dollars with monthly distributions. And then in terms of redemption, we also have some additional flexibility there. You can do a partial redemption as long as you stay at the $25,000 minimum. So let's say you have $100,000 in the fund and you need $50,000 for something else. You can redeem $50,000 and leave your other $50,000 still in the fund, or you can redeem entirely and exit the fund altogether. So we're very excited about being able to offer these options. It does take a lot of additional paperwork and planning and logistics on our end, but we really wanted to create a vehicle that was very customizable for investors. And we've really tried to, as we think about each of the levers in the Secure Freedom Fund, really trying to push it as much as possible toward that ability to customize.
Mm-hmm. And just a note on liquidity, we already touched on this briefly, but this is not a checking account. That's why we have that kind of 1 year period where we'd like you to leave your capital in the vehicle. We go ahead and buy apartment buildings with this capital. So, it's not immediately liquid for us to honor those redemption requests in that moment. In the past, we've always been able to honor those redemption requests promptly. It's important to note that the vast majority of debt and preferred equity funds, they have very specific redemption windows. So in other vehicles with, other, kind of investment options out there, typically it's like the last week of the first quarter of the year or something like that. There's tons of restrictions on when you can request redemption. In the Secure Freedom Fund, you can request redemption anytime. And then just like any other debt or preferred equity vehicle, we process those redemptions on a first come, first serve, best effort basis. So let's talk very briefly about the alternatives here. So let's just look at some of the options you might have if you're looking for a fixed income investment. I feel like there's more kind of economic and political uncertainty out there right now, and so with Secure Freedom Fund, we're trying to give people an extraordinary amount of certainty. If you're looking for a fixed income vehicle, like say a CD or a bond, you might be getting somewhere in the neighborhood of like a 4% rate of return. We quote a few figures from just the last couple of days. A 10-year treasury would be 4.29%. A CD might be somewhere between 2 and 4.45%. A money market account 4.3%, and like a Fidelity or Vanguard short-term bond ETF would be somewhere in the neighborhood of 3%. You're obviously getting a significantly higher top line rate of return with Secure Freedom Fund. But let's talk about what really sets this thing on fire, which is the tax advantages in the Secure Freedom Fund. So in all those other fixed income vehicles where it's a fixed rate of return where you have that certainty, you're paid on a 1099, which means that you're almost certainly paying ordinary income tax. And for the typical investor in our fund, that will be a 37% tax rate on that. In the Secure Freedom Fund, even though it's a fixed rate of return, it's a preferred equity vehicle, not a debt vehicle, preferred equity vehicle. So you're paid on a K1, which means that we're able to do cost segregation, accelerated depreciation, and bonus depreciation, and share that depreciation with you just like we do in our other vehicles. Recent changes in the kind of tax code here in the last few months mean that 100% bonus depreciation has recently come back into the mix, which means we're going to be able to share significantly more depreciation with our investors than we were anticipating. So that's a huge upside event for our investors that we're really excited about. Our goal is to allocate enough depreciation to you to defer some or all of the gains that are allocated to you. So if you had a $100,000 investment and you had $10,000 in gains, our goal would be to try to allocate $10,000 depreciation to you. We can't promise that particular outcome. There's a lot of variables that are outside of our control. And then the longer you stay in the vehicle, the easier it is for us to optimize your taxes. If you have the accrue and compound option, that it also makes it a little bit easier for us to optimize your taxes. And our goal is to essentially push as many of those gains as possible into when you redeem and exit the fund. And those would hopefully be treated as long-term capital gains. Using a lot of qualifiers there to say none of these are promised outcomes. Our goal is to push as much of the gains as possible into long-term capital gains, which is going to be half the tax rate of your ordinary income tax. So let's just kind of merge those two previous slides. Let's say you went and got a 4% fixed rate of return from just about any other fixed income vehicle out there where you're going to be paid on a 1099, and you're going to pay a 37% tax rate on that. So your after-tax rate of return is going to be somewhere in the ballpark of 2.5%. And should have mentioned this sooner, but feel free to throw questions into chat if we're going too fast or any of this math doesn't make sense. Please call it out, and we'll do our best to answer questions when we get to the end of the webinar here. So 2.5% after-tax rate of return in a typical fixed income investment. Now let's compare that with the Secure Freedom Fund. You'd get a 10.47% rate of return just in the first year alone with the accrue and compound option. And then let's say you stayed in the fund for 5 years and we were able to push all that into long-term capital gains because you'd stayed in that vehicle for a long period of time. And this is not even considering that we're going to allocate depreciation for you, so you're paying this tax later and you're able to compound your investment along the way. But just with the long-term capital gains tax advantage alone, your after-tax rate of return is only 8 point. Your long-term capital gains tax rate is only 20%. So your after-tax rate of return is 8.38%. It's more than triple the after-tax rate of return of a typical fixed income investment opportunity that you might have right now. Just incredible tax savings that you get, and your after-tax rate of return is almost triple, more than triple you'd get in other fixed income vehicles. So William Duras asked, is the 10% guaranteed? Excellent question. So a guaranteed payment is a very special term in IRS language. So even if you are being paid on a K1, as soon as we call this a guaranteed payment, unfortunately that income goes into your ordinary income tax rate. Another kind of colloquial expression for it that you might hear sometimes is a hard pay pref, or hard pay preferred rate of return. This is a soft pay preferred rate of return. And what that means is your distributions are driven by the returns that the assets generate. If for some reason the assets are not generating returns adequate to pay the preferred rate of return, it accrues and compounds just as though you were signed up for the accrue and compound option instead of the monthly cash flow option. Now, it's a worst practice, for the SEC to promise anything, to say here's what the IRR is, or this is a can't lose proposition. All investing involves risk. What the SEC recommends we do is point to our track record, which is that in all the time that we've done this, going on 10 years of offering different 10% fixed rate of return vehicles, we've never failed to honor redemption request, make an anticipated payment. And then the SEC says we should qualify that and say past performance is not necessarily indicative of future outcomes. So it's kind of a long answer to that question, but this is explicitly not a guaranteed payment, because if it was, that would unfortunately double your tax rate immediately. So this is a soft pay preferred rate of return. Another great question here from Scott Barber. Would you comment on how to take advantage of the depreciation on the K1 in a self-directed IRA? So if you're investing from a tax-deferred vehicle, there's really not any way for you to benefit that I'm aware of. Talk to your tax professional, but particularly like if you're in a Roth IRA, for example, it's completely tax-free. So you're already at a 0% tax rate, and there's no benefit that you can get from that depreciation, to the best of my knowledge. A huge portion of our investment in the Secure Freedom Fund comes from self-directed retirement accounts. Mm-hmm. Just the certainty, like if you put in 100K, 7 years from now, it's going to be 200K. If you put in 100K, you're going to be getting $833 a month from here until eternity, as long as you'd like to remain in the vehicle and as long as the vehicle is open. So that's really a great alignment for a lot of self-directed retirement account. The goal is often to give you some certainty in retirement. So while you don't benefit as much from the tax advantages of the Secure Freedom Fund, still has an excellent alignment with self-directed retirement vehicles because of the certainty that it provides and the just exceptional rate of return.
All right, let's talk about a couple of real stories of folks who have invested with Black Swan in a 10% fixed rate of return. Both of these stories, we've provided anonymity to our investors, but these are actual stories with the actual numbers. This first couple we'll share, we've given them the name in this presentation, Todd and Joan. Todd was the spouse of the physician, Joan, and he had retired with a pension paying about $2,000 per month. And per usual pension, that pension would end upon his death. At a relatively young age in life, he received a pretty concerning diagnosis with a fairly concerning prognosis. And at that point, he really had to grapple with the idea of, should he continue the pension and have that $2,000 per month, but risk that if he died prematurely, that pension would die with him, or he could take a cash out, and at that point, he would receive $400,000. The pension cash out, if he received $400,000 and he did a 4% drawdown rate, which is what's considered to be a conservative, reasonable number for someone to do with retirement type dollars, that would have meant $1,600 per month in income that he would be able to generate off of that $400,000. So that was a tough decision to make, right? Because he would be cashing out his pension, locking in that $400,000, but then only getting $1,600 per month at a 4% drawdown instead of the $2,000 that he was getting from the monthly payments of the pension. So they were really kind of going back and forth of thinking about his diagnosis, his prognosis, examining, how long might he potentially live, what that might mean for the pension, what his surviving spouse would do after he passed away, and really grappling with the idea that when he died and the pension went away, that they would potentially be surrendering a lot of their wealth, particularly if he passed away sooner rather than later. And so they came to us with this situation many years ago. They actually invested in a vehicle that even predates the Secure Freedom Fund, that really was the genesis of how we created the Secure Freedom Fund. So they've been investing with us for almost 10 years now. So they invested the $400,000 with Black Swan at a 10% rate of return, which generates $40,000 per year, paid out in monthly payments of $3,333 per month. And that was really a win-win, because they had the original principal, that $400,000. They were now getting $3,300 per month instead of the $2,000 per month from the pension. And then ultimately, he did pass away relatively soon after doing all of these changes. It was about 2 years later. And with that passing, the $400,000 still remains. So Joan could reach out to us and request a redemption of her investment that's been with us all of these years. And she would get her final monthly distribution, and then she would get the $400,000 back. So that's a real life, real example, pretty nuanced, right? Probably not many people are in, this particular situation, but a way of taking something like a pension that's generally a fixed rate of return, but that has a lot of kind of strings attached to it, and putting it in the Black Swan investment that has a 10% fixed rate of return, so a much higher top line rate of return, and also has a lot of flexibility so that investors can customize it to their own individual needs. We thought that was an interesting story to share. Again, probably not something that most of our investors are contemplating, but a way to see how we've really tried to create this so that investors can think about, what their particular goals are, their financial goals, their life goals, and modulate their investment in the Secure Freedom Fund to meet those exact goals.
Yep.
So,
There's
go ahead.
you can think of it as being very similar to an annuity, but with a radically higher rate of return, and of course the benefit survives your death, or a whole life insurance policy with a radically greater rate of return, and then essentially like a commensurate death benefit associated with it. We didn't even come up with these things. Like, we've just kind of put this opportunity out there for investors for almost 10 years now, and they've kind of come up with these things where they're like, oh
Mm-hmm.
man, I was looking at, I was sitting down with a insurance salesperson, and they wanted me to put, 100,000 a year into this whole life policy or into this annuity. I did the math, and at the end, I would literally have 7 times more wealth if I just put it into one of these 10% VIX vehicles than into like an annuity or a whole life insurance policy. And I mean, there are so many stories like this that are, ways that, like, there is a person here who has over $500,000 of wealth that it would have been zero before with the alternative. Not to mention a much standard of living, on that retirement income during that time that they earn that income. So it's a really powerful vehicle for people that are in different life stages, and they're looking at some of those different investment products.
Let's talk a little bit about this investor situation. Again, this is a real story of someone who is invested in the Secure Freedom Fund. This is an oncologist in Florida. I did an investor call with him, and he described for me how he was really working to replace his W-2 income over a period of about 10 years. I think he's in his mid 50s and is looking toward mid 60s of that retirement time and thinking about the lifestyle that he wants to have during that time. And I noticed that he kept mentioning a very specific number, right? Usually when we speak with investors, it's things like 25,000 or 100,000 or 200,000, right? A very round number. And he kept saying, I want to invest 444,000. And after he mentioned it a few times, I said, oh, tell me about where that number is coming from. I sort of wondered, like, is this his lucky number, or is this how much he, has in a self-directed retirement account or something like that? And he shared with me that he had just baculated the math. So he would like to earn $10,000 per month, $120,000 per year in 10 years' time. That means that he needs to have a capital amount of 1.2 million. And then moving back in time to the present day, 10 years, if he invests 444,000 with the compounding option, you can verify these numbers by Googling compounding calculator, and it'll come up with investor.gov. And if you put that into the calculator, 444,000 at a 10% rate of return with monthly compounding and adding nothing additional to the investment, after 10 years, that would grow to 1.2 million. And we have that displayed here on the chart. And then at that point, he plans to switch to monthly distributions. And at that time, that 1.2 million will generate $120,000 per year in 12 monthly payments of $10,000 per month. And I just thought that was such an interesting again, like Nick said, a lot of how we've customized the fund over time is because we listen to our investors and we hear that, right, we benefit from the creativity of our investors. And I thought this was just such an interesting story that wanted to share that too, of someone in a completely different situation, right? Not considering end of life, not making a tough decision between, two different types of investments, a pension or the Black Swan fund, but really thinking about forward planning, compounding, overall growth, but then also flexibility within that to switch to the cash flow option. So I wanted to share that example as well. Let's talk a little bit about what we do with these dollars. So the Secure Freedom Fund acquires and owns real estate assets directly. And we think that is a really important thing for investors to know. Oftentimes, fixed rate real estate investments are debt funds, which means people like us would raise capital and then we would loan that money out to other operators and they would use those dollars to renovate properties or to make up the difference between what the bank is able to provide for their mortgage and what they're able to raise from their own investors, all sorts of things. And that's not what we do with the Secure Freedom Fund. The Secure Freedom Fund directly owns the assets in the Secure Freedom Fund. So, like Northern Place Apartments is 100% owned by the Secure Freedom Fund. That's important because of the security there. The Secure Freedom Fund owns the sticks and the bricks and the dirt and the rent roll and all of the things that come from that real estate investment. We're not, multiple steps removed if we were just loaning the money out to other real estate operators. And then it's also what allows all of those tax advantages to flow through, like depreciation, because it's direct ownership of the assets in the fund. We acquire assets. We then do a value add strategy. That's what we've done the entire 14 years we've been investing. It's usually some combination of physical improvements, management improvements. We're vertically integrated. So we manage everything that we own through our company, Black Swan Living. That's really important to us because we believe that operations are everything. We have a belief that someone can buy the best investment at the best price with the best debt, and with poor operations, all of the value can be lost in a very short period of time. And conversely, someone can buy something that needs some TLC and hasn't been managed very well, has some warts on it, for lack of a better word, and with good operations, that asset continues to grow in value, the rent roll continues to grow, vacancy is low. And so we're big believers that operations is everything. And that's why we choose the very hard work of managing our entire portfolio. So that is how the Secure Freedom Fund is structured. And it's a $100 million fund overall, and we open and close it as we get new acquisitions under contract. So once your dollars are in the fund, you have ownership of all of the assets that are in the fund, going all the way back to the inception of the fund and assets that we acquire later. We open to raise for whatever we need so that, as Nick said, we don't just have the capital, just sitting in the bank. We need to raise the capital and then deploy it into the asset that we're acquiring so that we can start generating that return for our investors. And so we're so excited about having Villages at Essex Park under contract. We've had this under contract for quite some time. We've gone all through our due diligence. We've walked every single unit. We've had contractors of every type, roofers, plumbing, asphalt, pool, you name it. We've done exhaustive due diligence. We're through our due diligence period. And now we're in those final steps where we're working on getting to close. It's 288 unit community built across multiple phases in 1991, 1999. And then one of the phases as recently as 2013, $40.4 million purchase price. And you may have heard in some of our earlier messaging that we were at 41 and we were able to negotiate about a $500,000 discount as part of our due diligence. So we're down to $40.4 million for our purchase price. It's about a $16 million raise for the down payment of this acquisition. And one of the things that's so exciting about this acquisition is that we are assuming a HUD loan at 2.18%.
Not a typo.
Not a typo. You're not hearing wrong. 2.18%, a HUD loan with 37 years left on that loan. So this allows this asset to cash flow because the debt service is, very, very low, and it's fixed rate debt for 37 years. And that's what allows us to generate the return to pay out the 10% return to our investors. This overall community of 288 units is a mix of market rate units and LIHTC. Those are income restricted units for affordable housing. And we think that's really the sweet spot because we love LIHTC units. We love affordable housing. But we do find that in communities where there's a mix of both market rate units and LIHTC units, that the overall community tends to just have a bit of a nicer feel. And so we're excited that in a community this large, there is that mix. We're targeting our closing anywhere between October and December of this year. And really, it's just when HUD gives us the call and says that they've processed all of the paperwork for that loan assumption. When they're ready to go, we're ready to go. So that's what we're waiting on. This will be 100% owned by the Secure Freedom Fund. And what we're really excited about is it's just 8 minutes from our headquarters. So we can we can end this webinar and it's actually on our way home. So we pass it, multiple times per day. We'll show you a little bit about where it's located in Rochester. We are big believers in being close to our assets. I talked just a few minutes ago about how we think that operations are everything, and we're excited to be close to this asset, manage it very, very well, and give it the love and the attention that it needs. This community is really a wonderful community. So in 2013, the existing ownership added a pool, a clubhouse, a fitness center, a playground, and walking trails, and a pond to the community, which really changed the entire feel of the community. It's a 17-acre campus with 27 buildings. So even though it's 288 units, it's spread out over a large campus with a lot of green space. Many of the units have decks or patios. There's trees everywhere. There's garages mixed in there. So the units are spread pretty nicely far apart from each other. It really feels like just like a really comfortable, nice place to live because of how expansive the grounds are. And then if you're able to take a look at the slides, this picture here, where we're looking at the aerial view, in the lower left corner of that picture, you'll see that's Villages at Essex Park. And then you'll see there's two green spaces immediately adjacent to Villages at Essex Park. One of them is Watson Field. That's the soccer fields here in Rochester. That's where all the kids are every Saturday, every Sunday. Our kids play soccer there. We are at this field several times per week. I think we were there 3 days this week with our son doing soccer camp. We'll be there multiple days per week, through the fall season. And then immediately in the top part of that picture are the baseball fields. This is really important because it's beautiful green space. It decreases things like traffic sounds and those sorts of things. But it's also critical because LIHTC properties tend to attract families. Because they're income driven, people are able to meet the income requirements, typically if there's children in the home, right? Children don't have to be in the home, but that's often how you get to the people count that you need in order to have a family size that qualifies based on that certain income. And so in addition to everything that's physically owned by the property, the pool, the playground, the pond, the walking trails, this community is in walking distance, like immediately next to the two best places in town for kids to be involved in sports, for kids to be active. It's so well positioned. Even when I think it was the appraiser was touring it, and he's like, oh, like you get the soccer fields, but they're owned by the city and you don't have to maintain them. And we're like, yes, like you get it, my friend. And he's like,
Yes.
oh, and you get the baseball fields. Oh, and you don't have to mow those either because they're owned by the city. And we're like, yes, yes, we're very lucky with the location of this community. Very spacious units. Of the 288 units, over 100 of the units are 3-bed, 2-bath, which again, because LIHTC communities tend to attract families, it's really good to have that higher bed and bath count to be able to serve the population. And then every single unit has a private garage. That's becoming increasingly unheard of, particularly as building codes change. And there's, in the state of Minnesota, for example, there is no parking requirement that's required for new multifamily construction, which means someone could build a 100-unit apartment building and have 0 parking spots. There's no parking requirement anymore. And so because of the vintage of this community and also because of its location in suburban Rochester, every single unit has a private garage. And that's a really nice amenity in any community whatsoever, but particularly Rochester, Minnesota, where it snows and it's cold a lot of the time.
So here's a little story to go with this deal. This is a very special asset to us. So I grew up in Rochester. When I graduated high school, I moved 1,000 miles away. Plans to never come back, but I happened to meet a woman who happened to become a doctor, who happened to match to Mayo for her residency, and the one thing that would have brought me back to Rochester did. And when I was in Rochester, I was brought here because my mother had a traumatic brain injury. And there's kind of a tale of two cities in Rochester. Rochester is this interesting community. It has the highest median credit score in the United States. There's all these healthcare professionals. Like, it's an extraordinarily affluent community. But then there's a huge number of people that come to Mayo for hope. So my mother came here for like a multi-year traumatic brain injury rehabilitation program. And while we were here, we lived in Section 8 housing and in low income housing. And we lived in a few different communities. And this was one of them. I actually lived in this community when I was a young man in Rochester. That's a photo of me there when I was maybe 14 years old, and I think that's about how old I was when I lived in Essex. This is just so meaningful to us. I remember when I was growing up in these income restricted communities. At that time, I was there on a Section 8 voucher, and Section 8 if you increase your income, you're potentially kicked out or you lose your voucher. And I thought, man, this is crazy. Someone ought to fix this. You should be encouraged to do something with your life, to make something yourself if you're living in low income housing. And so the housing programs that we take advantage of, like LIHTC, that this exact community is a particular type of, you are able to increase your income. And we support these affordable housing programs, and we do it in very specific ways that are a hand up to people that are the old version of ourselves. At one point, when Elaine was a younger person, she was also living in Section 8 housing, and it just seems so incomprehensible that today we'd be blessed with so much to be able to steward capital from so many investors to serve our community, to serve the people who need to be served the most, people just like ourselves when we were younger. I'm a spiritual person. I think my path is guided, and I thought, man, it's really cool to buy a property that I used to live in.
Before we get to that,
Yeah.
I think both of us, our voices are maybe cracking a little bit. So let's bring a little humor into this. Can
Yeah.
you tell them the story?
No, that's where I was going. That's where I
Okay.
was going. Yeah.
This story has entertained our children for a decade, you guys. Every time they're at the soccer field, they're like, "Dad, tell us the story about when you lived there."
Yeah. So I was a handful growing up. If you think about the kind of person who wants to build $1 billion company and stuff, they're probably someone who likes to bend or break the rules from time to time, who doesn't mind making their own path. And as a child, I was difficult to manage. I don't know why, but one day I said, I'm gonna go find an M80. I went and bought some fireworks around the 4th of July, and this was supposedly a waterproof M80. And I'm like, I bet it's not really waterproof. So I light this M80 and I throw it in the toilet in our unit that we're in, because that's where there's just a ready pool of water available. And it didn't go out. It kept like the fuse kept burning while it was underwater. And I'm like, oh my God, this thing is like real. I can't believe this. And then I realized I had a very big problem that I had thrown this in the toilet. And I like took a few steps back and exploded, and the porcelain shattered like a grenade, and there's water everywhere and stuff like that. And that's a typical story from my childhood. And
So moms, dads, if you're struggling with crazy children, there is hope. Just hang on, give them 25 years.
they will one day blaze a trail or something. So the kids always say, "Dad, tell us the story when you blew up the toilet." And that's not a figure of speech. That is, I literally blew up a toilet with a quarter stick of dynamite. Did not get
in this exact unit, the little arrow pointing to it right here.
Nick lived here, and so I'm at Watson Field for soccer practice, many times per week, and the kids always point and is like, "That's where Dad blew up the toilet." Absolutely. So as I was saying, yeah, I'm a spiritual person. I think my path is guided. It seems uncanny to me that that we'd have the privilege to own assets like these and to take care of the people in our community that need it the most. And after we got under contract, I was like doing due diligence, going through the floor plans, and I'm like, I want to go find the floor plan of the unit that I lived in. So I lived in a 2-bed, 2-bath unit in the southwest corner of the community, and they're named floor plans. You can go to go look this up right now if you want. And the name of the floor plan that I lived in was the Swan. There's like a falcon and a hawk and a goose and stuff like that. And there's like 20 different floor plans. And the one that I lived in was the Swan. So I don't know about you, but I don't know. I think there's just certain things in life that are meant to be. And I think this is a thing that in life that's meant to be. And so just it's with incredible gratitude that we contemplate the purchase of this enormous asset that is going to create an incredible opportunity for us to serve.
I'm proud of you.
Well, thank you. So let's talk about how we protect your capital. That's ultimately how we look at every deal that we do. That's how we look at everything that we do. Elaine, kind of touched on how this is not rescue capital. We're not deploying this capital that you're giving us into someone else's deal. Most debt and preferred equity vehicles, they may or may not disclose it, but they're typically going out to debt markets to like lever up your capital so they can borrow money and then take the money that they borrow and lend that to someone else to a deal where there might be 5 different layers in that capital stack. And it's a little precarious. That's the fact of the matter. we are taking your capital, your new money, and we're putting it into new deals that we're acquiring that are very safe deals that we are operating. Deals with 2.18% debt. I think we're gonna do okay on that deal. This is an opportunity where we have no concerns about our ability to hit that 10% rate of return that we need to hit. It's not going to be easy by any means, but it's so completely feasible. It's going to be a walk in the park compared to some of the other value add deals we've had to do in the past. So the fund owns the hard assets that it's going into, and it's operating those assets. It gives us an extraordinary amount of control. That's how we've been able to make it through a challenging time in the market without any capital calls, without any capital loss. And we expect the same level of success with Secure Freedom Fund in the future. We have incredibly conservative equity positions in these deals with a very simple capital stack. There's you, us, and a senior debt holder who's a credit union or HUD. So very very safe capital stacks. We have fixed rate debt. So even if interest rates were to skyrocket for some reason, there's some tariff or who knows what, we're fixed.
We've got 37 years left to go on this one.
That's right. Yeah, we are already fully locked in on this particular deal. We're very proud of our operational team. I think that our operational team is second to none. There's a saying that no one is going to take care of your stuff the way you will. Like it's so critical that we own the property management company, that we manage the assets that we own. And then there are no GP level fees whatsoever in the Secure Freedom Fund. Elaine and I do not make money at this until y'all get paid. That's very important to us. It's very spiritually important to us that your interests are put ahead of our own, and we can't win until after you win. It's so incredibly important. There was a question here. How are you at Black Swan compensated? Do you have a flat fee, keep additional earnings above 10%, or other structure? So we have no acquisition fee, asset management fee, capital event fee, disposition fee, marketing promotion fee. There's usually about a dozen different levers that different GPs can turn to generate fee income for themselves on the front end of the deal. Being very transparent with you, we don't make a lot of money on the assets that we own and operate. Our team will be happy to tell you that every week we get together and talk about how we can generate more income on our assets because we put our investors first. That's just what we do. We do generate quite a bit of cash income with our real estate sales team, with Elaine's coaching cohort, the Freedom and Legacy group that she just loves and leans into so much. We do have some ways that create value that generate cash. But charging fees to our limited partners before they've gotten paid is not one of them. It's just not something that sits well with us. So that's how we protect our investors and we safeguard their capital. And then hopefully that answers that individual question.
Another question came in: do the GPs participate in the capital of the fund, or is the capital needed raised from LPs?
Great question. Another question we often get is, how can you pay that 10% because doesn't it take time to stabilize the asset? So we actually first created the Secure Freedom Fund over a year ago, and then we seeded the Secure Freedom Fund with our own capital. We put in about 1.4 million for the purchase of Northern Place Apartments a year ago. Northern Place is now stable and delivering returns, and then we use that to go buy the next deal and the next deal. And then in addition to that, we sign on the note for full recourse debt. So we have a full recourse loan from a regional bank on Northern Place Apartments. On Commerce Drive, the building we're in right now, it's in Secure Freedom Fund. Our corporate headquarters is in Secure Freedom Fund. We have a full recourse loan on the affordable portion of Essex Place. So half of it is the HUD loan, and half of it we're working with a credit union for debt on that. So we have a staggering amount of skin in the game because of those full recourse loan instruments.
All excellent questions. I see other questions have come in, and we will get to all of those. When a question makes sense for us to address kind of wherever we are in the presentation, we do that, and then we'll make sure that everything is addressed at the end of the time as well. And then Rachel also answers them in the chat as well, but we do try our best to answer them verbally as well so that it's captured in the recording. Let's talk about the Secure Freedom Fund portfolio. So even though right now we are raising for the dollars that will be used for the acquisition of villages at Essex Park, this is a fund instrument, which means your dollars go into the bucket, and then that bucket then owns the portfolio that's in the Secure Freedom Fund. And so you get ownership of all of the assets that already exist in the fund, and then all of the assets that will exist in the fund in the future. That's the way a fund works. So the fund it's getting to be a pretty nice size already. As Nick mentioned, we closed on Northern Place Apartments late last year, 72 units in Austin, Minnesota. Meadow Park Apartments, 90 units here in Rochester, and also 110 storage units as well. We closed on that in April. That's been one of our largest turnaround projects ever in the history of the company. Just a staggering amount of physical change, working through crime, bed bugs, roaches. I mean, you name it. Right now, we're working through all of our exterior renovations. So we have crews there enjoying every last day of summer that we get in Minnesota, doing an exhaustive exterior renovation. So that's Meadow Park Apartments. Rainbow Plaza is 105 units in Anoka. We closed on that one just a couple of weeks ago. Commerce Drive, which is our headquarters. We have a couple of single family homes in the fund, and it's likely that we'll acquire more in the future, just market dependent. And then we're under contract on villages at Essex Park. One of the questions that comes up is, when will we open the Secure Freedom Fund next? And I anticipate that this will be our last opening in 2025. And that's relatively easy for us to predict because we open when we get the next thing under contract. So right now we're raising the dollars that we need for villages at Essex Park. We'll have that capital available. When HUD says they're ready to close, we'll close on that acquisition. And we know that right now we don't have anything else under contract. We're always in negotiations, we're always doing tours, but we don't have anything else under contract. And typically with large commercial real estate deals, once something gets under contract, it takes at least 90 and sometimes even 120 plus days in order to close. So given that it's already the end of August, it's very unlikely that we would get something under contract and then raise for it before the end of 25. There's a slim chance that we would. I never want to say no. We've been doing this long enough to know you never know when the phone might ring and a broker says,
especially at the end of the year.
Especially at the end of the year. Yep. We've closed.
Get on the wait list.
We've gotten deals under contract the day after Thanksgiving that we've closed by the end of the year. We got something under contract the first week of December. We closed that by the end of the year. So it's not impossible, but that's a question that will often come up. And I do want to give that forward guidance that as of right now, we don't believe that we'll have another opening in the Secure Freedom Fund by the end of this year. Absolutely through 2026. The Secure Freedom Fund is a $100 million fund overall. So acquisitions will continue to come down the pipeline and we'll build to this portfolio. And we're just so excited about the portfolio that's coming together in Secure Freedom Fund.
Mm-hmm. So why would you want to invest with us? We've already touched on a few of these things. We have no GP level fees whatsoever. We've never had a capital call, which is something that's pretty exceptional. I'd say right now our kind of historic portfolio is performing probably in the top 5% of our peers nationwide. We're enjoying extraordinary safety and security for our investors that have trusted us with their capital here over the last 5 years. Returns begin the day your funds are deposited and continue until your funds are withdrawn. And we talked about how most debt and preferred equity fund vehicles, that's not true. There's significant periods of time where you're not earning a return. Today we've never even sold an asset, let alone lost money on a real estate deal. We've never missed a projected distribution. We're in a pretty interesting market here in Rochester, Minnesota. It's a blue ocean market, as we like to refer to it. It's a very insulated market, kind of this weird utopia bubble that the Mayo Clinic has erected around it, where Mayo's actively constructing a $5 billion expansion to their campus. That's Amazon HQ2, if you remember, that whole thing was only $2.5 billion, and we're on Midwest dollars here, so it's like 4 Amazon HQ2s being dropped into our backyard. Some of our buildings are hundreds of feet away from that campus, so a pretty incredible market that we're invested in here. We have a mountain of fixed rate debt. During the pandemic, 93% of multifamily deals closed with variable rate debt. We were the 7% that did fixed rate debt, and it's one reason why we've been so successful. And variable rate debt might make a little more sense now because it seems like rates are going to go down, and yet we keep getting fixed rate debt, even though we might get locked into like some lackluster returns for a while, because it's a safe thing to do, because maybe rates go up and we want to be protected from that downside event. Finally, we're vertically integrated, and we don't just have the property management company. We've got a real estate sales team. We have in-house maintenance, construction, lawn, snow, cleaning, tree services. We own more tractors. I don't even know how many tractors we own at this point. We own a lot of agricultural equipment. We own industrial stump grinders and grapples because it turns out those are really expensive services to hire, and we're able to do those services in house. On Villages Essex Park right now, they are spending over $100,000 per year on lawn and snow. We're going to reduce that cost potentially by like 60 or 70% by doing those services in house. That's how we're able to keep your investment safe. That's how we're able to drive returns to our assets.
Let's talk a little bit about our track record. So we've had consistent performance. We've never lost investor capital. And really the growth of our portfolio, as I said at the beginning of our time here together, we're just so grateful for the now over 500 investors that have invested over $100 million in Black Swan real estate that has allowed us to build this portfolio of $400 million in assets under management. We have offered a fixed return investment since 2018. That story I shared of Todd and Joan, the hypothetical names in that real example, those were some of our very first investors. I think they actually joined us in 2017. Mm-hmm. I could be mistaken. Let's go with 2018 since that's what is on the slides, but it's been quite some time that we've offered a very similar investment. We've never missed a preferred return payment. We've never failed to return capital when it's requested. That's called a redemption. We've never lost money on a real estate deal. And we've taken that investment that we've offered all of those years and evolved it into a Reg D 506C, which is what allows us to publicly discuss it. Without having a Reg D 506C, it was actually illegal to sell securities the way we're doing. But by having a Reg D 506C, we're able to discuss this investment opportunity with all of you. And that really came from overwhelming investor demand. Nick and I do all of our investor calls. We always have since the beginning of Black Swan Real Estate. And really just listening to investors, particularly through 2022, 2023, early 2024, as interest rates went up, inflation was really hard to tame. There was so much uncertainty through the election and the new administration. And hearing from investors that they wanted to have clarity and flexibility and the opportunity to customize their investment, we just took all of that information that we heard from our investors on those investor calls and just really put our heads together and said, hey, we should launch the Secure Freedom Fund, and we'll model it after this investment opportunity that we've had all the way back to, when we first started working with passive investors. And then that's the portfolio that we've built in the Secure Freedom Fund. And we would love for you to be a part of it. If you would like to join us in the Secure Freedom Fund, now is the time. We have, I think, just a few million left in this opening right now for the capital that we're raising for the acquisition of Villages at Essex Park. You can get all of the information at securefreedomfund.com, and then particularly securefreedomfund.com/how-to, and there's a QR code right here on the slides as well. That drops you right into the step-by-step instructions for joining the fund. So during this time together, we've talked about all of the options that you would choose along the way, the amount that you would invest, $25,000 or higher in increments of $1,000, if you want to receive monthly distributions, or the compounding option, how you hold the investment in your personal name, joint, trust, LLC, self-directed 401k, self-directed IRA. And you do all of that paperwork inside of the Invest Next portal. You electronically sign the PPM and the offering documents, and then you can fund your commitment right inside of the Invest Next portal as well. Most people link their bank account with ACH, and it's just a couple of clicks. People can go through this entire process, usually in about 15 or 20 minutes. And all of those step-by-step instructions are at securefreedomfund.com/how-to. If you have any questions about, say, your custodian for your self-directed retirement account, or mobilizing your capital, or technical issues with signing the paperwork or anything like that, we're here to help you with that. So our next couple of slides talk about how you can reach out to us if you have any questions. If you have any questions and you're here live, go ahead and drop those in the chat, because we're going to get to the Q&A here in just a few minutes.
Lots of good questions I see already.
But if questions came up for you after our live presentation is over, or you're listening on the replay, know that you can reach out to Nick and I at any time. As I mentioned just a few minutes ago, we do all of our investor calls. You can use this QR code here that drops you right into Calendly. It's a service where you're linked into our calendars, and you select the time that you would like to have a one-on-one phone call with us. You can also email us, nick@blackswanteam.com or elaine@blackswanteam.com. And what I always tell folks is any email that you receive from our company, whether it's a weekly newsletter or an update inside of InvestNext, any of those, if you just hit reply to those land in my inbox. So you can just search for Black Swan in your inbox, reply to anything, and that's going to get to me. If you specifically need help with things like the paperwork, setting up your commitment, technical concerns with InvestNext, resetting your password, those sorts of things. Rachel is here to support you. She's our director of communication. She's absolutely amazing, super timely with her communication. She knows InvestNext inside and out. She's worked with all the custodians. She's a gem and she would be delighted to help you. You can email her, rachel@blackswanteam.com, and she'll help you with those sorts of things. So investment type questions, send those to Nick and I. Technical type questions, paperwork, those sorts of things, you can send those over to Rachel. And all of this is right at securefreedomfund.com. So right there on Secure Freedom Fund, you'll be able to click the button to go over to our investment portal, InvestNext, and invest now. You'll see the PPM. I think Rachel's working on uploading this version of our slides. The most recent time when we launched in May, those were the slides that were up. We'll get this replay video uploaded tomorrow, so that will be available both on our YouTube channel. It will go out via email, and then it will also get uploaded to securefreedomfund.com. Our calendars are right there at securefreedomfund.com, and then those how-to instructions. So really, that's your one-stop shop. If you just hop over to that website, we've really tried to put everything there in a very clear, concise way so that any questions you have when you're ready to make your investment in the Secure Freedom Fund, you've got everything you need right there at your fingertips. This raise has been so exciting, and I cannot tell you how grateful Nick and I and Rachel and our entire team are for the existing investors in the Secure Freedom Fund. For those of you on our wait list, we've raised over 14 million in capital in just the last, I think, 10 days or so that we've been open to the wait list. And every time we see a new investment, we get an email, and every time that comes in, we stop and we think about you and we're grateful for you. And it's just such a privilege to, as Nick said, to be able to grow this portfolio and to do it alongside all of our amazing investors. And this particular one is really special to us. They're all special to us, right? It's like sometimes people ask me like, well, what's your favorite? I'm like, well, it's kind of like being a mom. Like there's different things that you like about, different assets in the portfolio. This one's really special, and we would love for you to be a part of it. It's also special because it's likely the last time that we'll be open for investments in the Secure Freedom Fund in 2025. And then the last couple of times we opened, we were acquiring smaller acquisitions. Like, for example, Rainbow Plaza was just a little over 10 million. And so we actually closed before we were able to even do a public webinar. We just opened to our existing investors and to our wait list. So if you're considering getting into the Secure Freedom Fund, now's your chance, because this is a larger raise, which allows us to have this couple of million that we're still working on in our raise right now. And then once you're in the Secure Freedom Fund, then you're first in line for all of our subsequent openings. We first open to our existing investors, then we open to the wait list, then we do a webinar like this where we open it to our broader community. We would love to have you join us if you're an accredited investor. SecureFreedomFund.com. Hop over there, do the paperwork, let us know if you have any questions, and we'll see you inside at the Secure Freedom Fund. I think that's everything. Should we start with our questions?
Yeah, so there's a few technical questions I'll dive into, and I'll preface that by saying, so I'm a trained career engineer, and the apex of any invention is the appearance of simplicity. So think about like eyeglasses. Like you put them on and you can see it's magic, and you take them off and like they're so simple, but think about the amount of complexity that goes into the engineering, the research and development, and then the fabrication of a pair of eyeglasses. It's a staggering amount of complexity to create something that appears simple. So the Secure Freedom Fund, it's incredibly simple. At least the benefits that you get are so clear, so simple. We believe that complexity is the enemy of execution. So like it's easy to get in. It has a very easy entry point. It's only open a few times a year, so getting in is kind of the hard part. But we do have an opening right now. Getting out is very easy. Doing the compound or the cash flow, it's a choose your own adventure thing. But some of the mechanisms that we have to put in place to make that simplicity possible, it's involved. So I'm just prefacing that. So for example, one of the notes that I saw was 2.18% debt. I've never even heard of that. Almost like it seems too good to be true. And it's not normal. So this being a mixed income LIHTC community, being an affordable housing community, it is eligible for types of debt that no other assets are eligible for. In fact, it's eligible for some of the best debt, some of the most favorable debt in all of global capitalism. So this HUD debt, HUD's goal is not to generate profit for themselves as a lender, it's to support affordable housing for the US populace. So that's how you get a 2.18% loan. In fact, this particular loan is even exceptionally advantageous because They prepaid the MIP. It's like a PMI on your personal mortgage. So the person who originated this note, they knew that they were going to be holding this note for a very long time. So they prepaid millions of dollars in MIP on this note, and it's a fully transferable note. Everything was set up perfectly. You can only get these sort of absurdly favorable loans on affordable housing properties, and the government does that because they recognize that operating affordable housing is incredibly difficult. It is challenging work. You need a gritty, savvy team because there's just more to it when you're serving that population, and they sweeten those deals with those favorable loans, and they won't give those loans to anybody to originate them or transfer them. So you have to be on a list that's approved by HUD for your management company, for your equity group, and the state of Minnesota has to sign off on it. So if you've ever operated an affordable asset before and they don't like the way you've operated it, they won't let you get one of these loans. In fact, they won't even let you buy the community without the favorable loan. So to give you some idea of the extraordinary amount of complexity here, like we met with HUD this week about one of our other assets that has a HUD loan on it, and they said, "Hey, we noticed that you've poured over $500,000 of cash into this asset in the last 3 months. That's unheard of. What's wrong?" And we said, "Oh, well, we've renovated like 38 units in the last 90 days." And they're like, these units are 2,000 square feet. That's impossible. No one can renovate units that fast. And we're like, "No, we did that. Here's all the records and everything." And they had demanded to come out and walk all 37 units to see that we actually, they were afraid that there was something wrong with the community. And that's why we were pouring so much cash into it, that there was some problem they couldn't see. So they literally came out and inspected the asset. That's the level of complexity that goes into this. You typically have to have hundreds of millions of dollars of assets to be eligible to get these loans. So that's one point, is just that disbelief. That's how you get a 2% loan. There's a lot that goes into it. There's a lot to be qualified for it.
And why don't you speak to the debt that's on the other assets that are already owned by the Secure Freedom Fund?
Yeah. So in a high interest rate environment, taking advantage of assumable mortgages is it's beyond critical. So like the asset that we just closed on at Rainbow Plaza just a couple weeks ago. So we assumed a first loan from Freddie Mac. So that's another government subsidized housing loan provider. And we purchased this asset from a nonprofit group that's eligible for like an extra special version of those loans that have better terms or at a lower interest rate, have a longer amortization period. So that loan is at, I don't remember the rate off the top of my head, but I think it's at 4%. There's 7 years left on that fixed rate. It had a very high balance. It is interest only payments the whole way. I'm going to say that again. There's no amortization. It's just IO payments the whole way. And it has a second loan from a group called Mercy Housing, and they're another nonprofit housing provider that they offer subsidized loans. So that is a payments optional loan, or a soft pay loan. You don't have to make payments on the loan, and that's at 2%. So our blended interest rate on that whole deal is something like 3%, with interest only payments for the first loan and completely optional payments for the second loan. And again, very, very few people are eligible for these loans. Only people that provide affordable housing are eligible for those loans, and you have to kind of buy a seat at the table, and you have to earn your stripes, and they come out and inspect you a lot and go through your books and make sure that you're doing things, you're providing affordable housing in the way that they like, and you're not allowing crime to happen in your community. You're taking care of the community. But once these different groups vet you over the course of many years, and they all talk to each other, and if you mess up, they tell each other, and you go on a naughty list and stuff. If they like you, you become eligible for these extraordinarily favorable loans, and ultimately that's how we're able to pay that 10% rate of return at a time when a lot of other groups can barely make their mortgage payments, is because we're providing affordable housing. We're doing a damn good job of it, and different government agencies and nonprofits and affordable loan providers recognize that and are allowing us to get these incredibly favorable loans.
And we've been working on this for years. If you go back to our webinars in late 2021, early 2022, we talked a lot about how we wanted to start. It's called working on our resume. We wanted to start working on our resume. And we finally got a breakthrough when we were able to acquire Douglas Trail Townhomes here in Rochester. That one is owned by Black Swan Real Estate Fund too. And we were so excited about that, because we were able to get an in, we were able to work with the state of Minnesota, get approved. And then once you're on that list, then you can start building your resume. Then we were able to acquire Georgetown, Northern Place, residents at Discovery Square, a portion of those units are in
Yep.
programs like this. And so this has been a many year process that first we had to get to where we had an established enough company, period, and an established enough property management company. And then we've had to doggedly work on building this resume with HUD in the state of Minnesota and all of these other programs. And
Yep.
it's been a lot of fun. So
It's also worth mentioning that and this is a very mission driven thing for us. Every study that's ever been done on the topic shows that mixed income housing is the solution. It's the solution to everything. When you have rich people mixed with poor people, they both hate it. They both would rather only be with people from their socioeconomic status. But when you measure longitudinal outcomes 10, 20, 30 years down the road, the higher income people that were mixed, they have no deleterious impact whatsoever from being in a mixed income community. And the low income people that are in that mixed income community, the kids, the children that grow up in mixed income communities, they have the same outcomes as the non low income households that grew up in that community. They're indistinguishable outcomes. I mean, that's the magic that everyone's looking for. That's why we pour tons of money into assistance programs and money for schools. And I mean, trillions of dollars that are spent on trying to like solve poverty and get rid of generational poverty. The key is to just have low income and market rate people live together in a community and have them mix day to day. And they both hate it. And you have to have really skilled property managers that manage those communities, because there are a lot of cultural collisions that take place on an hourly basis. But if you have skilled managers that can run those mixed income communities, guess what? Those poor kids, they grow up to become the people that own that community at the end. I had the privilege to live in a mixed income community when I was a poor kid in Rochester. That's why I'm not a poor adult in Rochester. Like that's the numbers. And that's why this is just such an incredible mission thing for us. Like this is the solution.
So good. So good. A simple question came in. Will we have to file a tax return in another state such as Minnesota? Yes. So the assets in Secure Freedom Fund are owned in the state of Minnesota. And so you would need to file a tax return in Minnesota. Next question is, generally in real estate, depreciation is recaptured when we sell. When someone asks for a redemption, I don't think you actually sell anything. So how does depreciation recapture happen? You're absolutely right. So when an investor exits the fund, that doesn't mean that the fund as a whole has sold, say Northern Place Apartments or Meadow Park or something like that. The investor has had some depreciation allocated to them. And when they request a redemption, there is that depreciation recapture. Mm-hmm. So they would have that tax consequence that they would need to factor into when they're making the choice to redeem from the fund.
Yep. And if you were to hold that asset until you passed away, as in our example, you'd potentially be eligible for stepped up basis. So that tax could die with you. We very much built this vehicle with the future in mind. And that's also very much worth mentioning, just thinking about the eyeglasses, the complexity. Your K1, there's going to be a lot on there. So for example, you might see a very small amount of interest income, because when you put your money into the fund, we put that into an account that generates an interest rate. And a portion of that is passed on to you as profit. And so you might see a mix of interest income, of ordinary rental income, of long-term capital gain, of depreciation recapture, and choose to exit the fund. And our goal is to push as much of that into long-term capital gain as we can. But you'll see lots of different boxes populated on that K1 depending on what the future holds.
Absolutely. A question came up. If enough investors are requesting funds, have you ever had to sell assets to provide liquidity? So in the whole history of our company, we have never sold a single asset. We are big believers in buying something, doing a renovation, and then taking very good care of it on and on and on, and improving those assets over time. So in the entire Black Swan portfolio, we have never sold a single asset. If there was a situation where there were so many redemption requests that we, needed additional liquidity in the fund, that would be an option, that we could sell one of the assets to generate some type of liquidity. Again, that's never happened, but everything that we think about, there's a webinar that you can pull up. I think it's called the Black Swan Vision. I did it maybe about 6 or 8 weeks ago. And we talk about kind of our decision-making algorithm. And one of those things is having many layers of optionality. And so that's one of the many layers of optionality that we would have in the fund if we needed to generate additional liquidity in the fund, would be to sell the assets. But it's never happened in the past, and it's not the plan that would happen.
We have a plan A, B, C, D, E, F for honoring redemption requests. Just one pretty huge example of that is like one of the assets in the fund right now is owned with cash. There's no debt on it whatsoever, which we would never do in like one of our legacy funds, because if you come to our events, you know that you get a higher overall rate of return when you own an asset with leverage than owning it with cash. However, let's say that for some reason there was millions of dollars of redemption requests that came in for no particular reason. We now have an asset that we could leverage, and that particular asset, it can make a 10% return without having leverage on it. So even though it's kind of harming our overall rate of return, we could probably get a little more profit, so to speak, out of Secure Freedom Fund for ourselves. It enhances the safety to our investors by holding it with cash, so that it's just an option that we have available that we could leverage that asset in the future. So that's just one example. There's 15 different mechanisms that we kind of have in place to make sure we're able to honor those redemption requests.
Should I wait to fund until I'm verified as an accredited investor? So if you would like to sign your paperwork and get started on remitting your funds while you're in the process of getting your verification of being an accredited investor, you're able to do that at securefreedomfund.com/how-to. Step 5 is how to provide for us your verification of being an accredited investor. This is a Reg D 506C, which means every investor does need to be accredited. You can have your attorney, your CPA, your registered broker dealer write a letter for you verifying that they are one of those licensed professionals. They've verified your financials and you meet the criteria of being an accredited investor. We make a form available to you that your CPA or your attorney can fill out. You don't have to use our form. We just make that available because it's really simple. They just have to check a box and sign their name and put their license number on. So it makes it a little bit easier for them. Or you can use a service like verifyinvestor.com, where you submit your financials to verifyinvestor.com and then they create the letter for you. Our investors do, some combination of all of those three. And then once you have that letter, you can either directly upload it to your profile in the portal, or you can email it to either myself or Rachel, and we'll take care of uploading it for you. Good question there. Couple of questions kind of go together, so I'm gonna answer. They're kind of fun. Like, what is our exit strategy, and what are we going to be doing in 10 or 20 years? I do wonder what we're going to be doing in 10 or 20 years. Probably
Ain't no telling, baby.
Something pretty fun.
Yeah.
For this property, what percentage of the units are market rate versus the affordable units?
So 50% of the units are market rate, and 50% of the units are affordable. It's really lovely the way they're mixed in together. So all the amenities are in the center. The market rate units are the ones that kind of back up to the green belt with the soccer fields, the baseball diamonds, and the affordable units are the ones that kind of back up to like the road frontage and stuff like that. But everyone has like really incredible access to the amenities and everything. It's a really well thought out mixed income community.
Yeah. The next question is, with the continuous opening in conjunction with property acquisition from time to time, can you comment on how you prevent equity dilution of percentage of ownership?
Yeah, so the short answer is that this is not a concept that applies to the Secure Freedom Fund, because your rate of return is a fixed 10% or more if you choose the accrue and compound option. There's not like a fixed pool of assets where there's additional shares that are diluting your ownership in that fixed pool of assets. In fact, it's quite the opposite. So there's more assets that are being added to the pool as investor dollars are being added to the pool, and we're only going to add assets to the pool that can make the 10% return. That would be bad business if we were adding assets to the pool that were worth less than we were paying or weren't able to make that return. So each asset that's added to the pool, it's the opposite of diluting your return. Your ownership stake in the Secure Freedom Fund actually becomes more secure, which with each asset that's added to the fund, and your rate of return remains identical regardless of how many assets are added. So this is one of the questions I saw where like this question is not wrong. It's not an inappropriate question. It's the way we've designed the Secure Freedom Fund. There's some complexity behind that of how we're able to deliver that 10% fixed rate of return and not have an issue with share dilution.
Yep, good question there. And then I think the last two questions kind of go together. I don't see any other questions that we haven't answered yet. If anything comes in, or if you have anything on your mind, pop that into chat, and Rachel will make sure she gets it over into
hit a bunch of repeat questions at once here
into our document. So we'll do these two questions together. What is your exit strategy for the fund, and what will you be doing in 5, 10, and 20 years?
I'm kind of curious what she says. We're just so incredibly blessed that we get the privilege to do this. This is about a lot more than money for us. We have enough money. We're good, and we're so incredibly grateful for that. But when you reach financial freedom, we do a lot of coaching. Elaine has her incredible coaching group that she leads, and we specialize in in the astronaut problem. When
Mhm.
astronauts they went and they landed on the moon, they came back and they struggled with alcohol abuse and drug addiction, because after you land on the moon, like, what else is there in life? And we found that when people achieve financial freedom, which we've helped countless people do with vehicles like the Secure Freedom Fund, uh, there's sometimes not a beautiful life on the other side of it. People have lost their purpose somewhere along the way. So, we believe that living a life of contribution, of making the world a better place to live, of leaning into all the potential that you've been given and seeing what you can do with it in your short time on this earth, like, those are the things that get us up in the morning and keep us happy and fulfilled on the other side of the astronaut problem. Like, we think this is what a beautiful, joyful life looks like. And yeah, you get to deal with some really challenging situations like cockroaches and bed bugs and stuff in the area that we choose to serve. But we've tried laying on the beach for a few days, and it gets boring real quick. So I think we're probably going to continue to serve, in providing housing to the places that we live for years to come. We might do some other stuff too. I think whatever we feel called to do, where we feel like we're going to have the greatest impact, I think that's probably what we'll be doing. We have guesses, we talk about it all the time, but I don't think we really have any idea what we'll be doing, even 5 years from now. I think it's going to be really cool, whatever it is.
I was really, quite tickled today. Our leadership team is self-implementing EOS. That's called the Entrepreneurial Operating System, and it's a way of thinking for small businesses as they really start to mature. And companies will either self-implement EOS or they'll hire an EOS implementer. And if you've never heard of EOS, it's somewhat irrelevant from what I'm about to say, but many of you, have implemented EOS in, say, like a private practice or something that you're doing in your life. And one of the questions in EOS is, what is the 5-year vision for the company, right? Which makes good sense. Where there is a vision, everyone knows how to walk toward that vision. And one of our senior leaders sent me a message and he said, "Hey, Elaine, when do you think we'll be a billion-dollar company? We're working on our EOS vision and we need to know what year to write in, when we're going to hit that milestone."
Just a little bit of impatience in the question, right? Like how far away are we here, guys?
Yeah. And there was a time when that was like a fun aspirational thing to say, right? Many of you that are listening right now, like, remember that time, right? You remember when we were at 50 million, 100 million, and we're like, oh, we're going to be a billion-dollar company someday, guys. And I said, well, last year we acquired about 75 million in assets. This year we're acquiring about 100 million in assets. I anticipate that 2026 will be pretty similar. So if you do the math, probably about 6 years. We tend to kind of pick up the pace as we grow. So let's call it 5 years. So I think we'll be a billion-dollar company in 2030. And I felt so much certainty telling him that, to say, hey, you go out and you lead our leadership team with the vision that in 5 years, this is going to be a billion-dollar company. And the math just speaks for itself, right? There was a lot of time where that was just pure belief, right? That we believed it, our investors believed it. And now it's I don't want to say a bit of a foregone conclusion, right? Nick and I try to be very humble. We try to, recognize the grace that we've received in our life. And we know that we need to do our part. But it seems as though these days it's more of a math problem than it is a vision problem.
It's like having a 5-year-old, and it's like, yeah, pretty soon that 5-year-old is going to be 10, and like,
and that's it.
You have a bedroom for that kid, and you're planning for it and stuff. It's incredible. And that our leadership team is coming to us, to say, hey, what's going on? We need to make sure we've got a bedroom, for when we're a billion-dollar company.
I thought that was really fun. In terms of our exit strategy for the fund, as we've been building the overall Black Swan portfolio, right, all the assets that we've acquired with our own dollars in funds 1, 2, 3, and 4, and now in the Secure Freedom Fund, we've always targeted about a 20 to 25-year hold period. And that really just comes from the age that Nick and I are. When we look ahead of our biological lifespan, we're excited to continue to grow this company and be very actively involved for about 20 to 25 years. And then at that point, it makes good sense, especially when you're working with hundreds of passive investors, to think about a disposition plan, right? We've never felt comfortable saying like, oh, invest with us for the next 100 years. Maybe it'll be us, maybe it'll be our kids, maybe it'll be a CEO, who knows, right? That always felt a little, kind of too far out there. So we've always said, within our biological lifespan and the lifespan of most of our investors, we're going to operate this portfolio for about 20 to 25 years, and then we'll exit the entire portfolio. What that looks like is anyone's guess. And I share these things. Let's call this like the entertainment portion of our time here together. This is not part of the yes, this is not part of the PPM. This is not part of like the investment disclosure or anything like that. But I think it's fun to think about.
Mm-hmm.
We could disposition each of the assets along the way. We could choose to disposition them at various times because we get a great offer, because of changes in the economic cycle, right? One of the beautiful things about the portfolio is each individual asset is its own kingdom, right? We can operate that asset and do with it what we want, with that own asset. Nothing is like linked to each other, right, inside of the overall portfolio. When we get to the end, about say 20 to 25 years, we've always given ourselves a nice buffer there. We've never said like we're going to disposition the portfolio in 2045. What if that's a horrible year in the economy? Like who knows what's going to happen in 2045? But starting about, 17, 18 years from now, we'll get some sense of what's going on in the economy, and we'll start to get some sense of when would be the most opportune time in, this economic cycle to disposition this portfolio. We could choose to disposition the assets one at a time, right? Just selling them to mom and pops, other small private equity firms, those sorts of like people, kind of similar to us, but 20 years from now. We could choose to bundle up a portion or even all of the portfolio and sell it as one lump sum to a very large private equity firm, say like Blackstone or something like that. That's part of our calculus when we think about operating our own portfolio, because typically a very large private equity firm like that, number one, they want to write one big check and do, they don't want to be placing 50 million here and 20 million here and 10 million here. They want to write one check for hundreds of millions or maybe even something with a B, and they want to know what the operations are that's going to come with that. That could happen. Again, who knows? Consider this the entertainment portion. We could convert the portfolio into a REIT, a real estate investment trust, in which case our investors would have the option to either exit out of whatever fund they're in, 1, 2, 3, 4, Secure Freedom Fund, whatever else exists between now and then, and exit from the fund, or they could convert whatever shares they have in whatever fund they're in into shares in the REIT. One of the benefits of that is shares in a REIT are much more fungible, right? So you're able to sell them when you want. You're no longer like tied to like the fund with all of the other investors. It's much more similar to, owning some stock in Apple or something like that. Very easy to pass them down, all of those sorts of things. The benefit of something like a large transaction in either selling the entire portfolio as one large chunk or even, one portfolio as a whole, or converting the portfolio into a REIT is that typically you're able to get much more value out of the portfolio as a whole. These numbers are, who knows, right? But let's say the portfolio is worth, do you want to do the numbers? Let's say it's worth like 5 billion if we could sell each individual asset. Like what do you think it might be worth if we sold it as one individual portfolio?
So it all depends. The goal would be that the whole is greater than the sum of its parts, but often the acquiring, entity, they want, some piece of it, and then there's some extra things that aren't very valuable to them. So it's all negotiated. I would say for most people, if they can hit par value, they're okay with that. I would hope that the whole would be worth more than the sum of its parts. So hopefully it's worth 6 billion or something, which is a really big deal, because if you buy it with like 20% down and you can get it 20% more than it's worth, so to speak, well, you've doubled your money, right? That's a staggering difference if you're able to do that. And we do that on a small scale. Like we'll buy 4 next door apartment buildings, and then just by having all 4 of them in a row, they're suddenly worth much more. The whole is worth more than the sum of its parts. And we're trying to build a portfolio and a business that the whole is worth much more than the sum of its parts.
Again, consider that your evening entertainment.
So 6 billion.
6 billion.
6 billion.
Consider that
something with a B.
Your evening entertainment. That is so far in the future that what I want for people to hear there is that we're thinking about these things.
We're thinking about you.
We're thinking about you. We're thinking about firms that are a decade, a generation ahead of us, kind of watching like, well, what are they doing? What decisions are they making? We know lots of people that have had big, big, big exits from real estate companies, tech companies, right? You name it. we're going to those people and we're asking them, how did you exit? What did you do? How did you serve your investors? So we don't know the exact plan. It's too far in the future. We know what we can model today and what we can model over the next, say 5 to 6 years. It's a pretty reasonable time frame to be able to model. But we think about how to maximize the value of the portfolio, and it's probably something more than just sell each individual asset all by itself. It's pretty fun. It's fun stuff to think about.
We put a little bit of thought into it.
We do.
Start with the end in mind.
Absolutely. I think those are all of the questions that have come in. It's been a joy to hang out with you this evening. I hope you enjoyed learning about the Secure Freedom Fund and how you can customize it and optimize it to your own financial goals, about Villages at Essex Park, all of the financial strength of the assets that are in the portfolio, some of the personal stories, right? About Nick living at Villages at Essex Park, a little bit about what we just shared here at the end about how we're thinking about the long range vision for the Black Swan real estate portfolio. For those of you that are joining us in Real Estate Real Life in September, either in person or virtually, we're so excited to have that time to be together and to give you a firsthand glimpse at the portfolio. One of the most amazing things about Real Estate Real Life is that we take investors and we tour these properties. We'll be able to do a drive-through on the bus of Villages at Essex Park. So we'll be able to see the community, the pool, the walking trails, the ponds, the clubhouse. And then for people who are joining us for VIP Day on Monday, September 15th, which is a smaller portion of the overall Real Estate Real Life event, we're working with current ownership to be able to tour through some of the units. We can't take the whole group because we're only under contract, so we don't own it yet, but we can take the whole group on the bus and then take a smaller group on VIP Day. We love being able to take investors through and say, you own this building. Here's the renovations that your dollars are being used to do. Have lunch in your own apartment building. And we're excited that this year for Real Estate Real Life, last year was our first virtual year. This year, we're doing the virtual option again. You can learn all about the ticket types at rerl2025.com. And we are piloting bringing our virtual attendees along with us for the property tours. So we'll have mics on, we'll have someone following us with a camera. You'll get to hear what we're sharing when we're driving between properties on the bus. Excited to see how that goes, but we wanted to have that piece even for our virtual attendees. It's one thing to see the pictures and to hear us describe the properties in a webinar type format. It's another to be right inside of those properties, either if you're here in person or joining us virtually. So excited about that. Please join us in the Secure Freedom Fund. We're excited to have it open. It's always a pleasure to be with you guys. I think that's a wrap.
Thanks, everybody.
Good night, everyone.